Hello and welcome to Business 360. I'm Parikshit Luthra and here are the headlines we are tracking this evening. It's a day of extreme volatility on Dalal Street. Indices take on heavy losses in early trade, triggered by persistent fears of a global recession next year and a surprise move by Japan's central bank. But a late pullback helps them end flat. The rupee also recovers most losses as dollar selling by banks and a weak global dollar offset pressure from rising crude oil prices. Asian markets go into a tailspin after the Bank of Japan throws a curveball, allows the yield on its 10-year bond to move 50 basis points on either side of its 0% target against the earlier 25 basis points, says the adjustment will improve market functioning and help it maintain accommodative financial conditions. After weeks of negotiations, EU nations agree on a natural gas price cap to tame the energy crisis. Member nations decide to trigger a cap if prices exceed €180 per megawatt hour for 3 days on the EU's benchmark platform. The cap will be effective from the 15th of February next year. The government may look at sweetening the pot for potential buyers of IDBI. Sources say it may prompt the tax department to consider the stock's fair market value at the final bid accepted price. Move will prevent any additional tax burden on the final buyers if the stock price appreciates. The government informs Parliament that there have been complaints against 12 electric vehicle makers for allegedly violating FAME subsidy norms. Says 2 of these firms have been suspended already. Adds that processing of pending claims by these firms has been stopped till they submit evidence of their compliance. Dabur India's promoters, the Burman family, sells nearly 1% stake in the company through block deals. Dabur says the family will use the proceeds to fund some private ventures.
I do hope that the worst is behind us in terms of inflation. And one is seeing that in some parts there is a bit of a softening.
Nestle India boss Suresh Narayanan says he hopes the worst of inflation is behind us, but adds it would be difficult to forecast an easier 2023 just yet. Adds that he does not see the D2C segment as a large revenue generator. Expresses confidence on Nestle's repertoire of brands. SEBI board meets to discuss crucial changes to its buyback regulations. Will also take up regulations around governance of market infrastructure institutions. North India continues to grapple with dense fog. Low visibility conditions impact road, rail and air traffic movement. The Met Department says the situation in Punjab, Uttar Pradesh and Haryana should improve starting tomorrow. On to the day's market action. It was a day of extreme volatility on Dalal Street. Indices took on heavy losses in early trade, triggered by persistent fears of a global recession next year and a surprise move by Japan's central bank. However, Nifty and sensex staged a late pullback, helped them end with minor cuts. Sensex fell 104 points, while the Nifty fell only 35 points. Reliance and IT stocks led from the front. Prashant Nair is here with the details. Prashant, volatile day of trade.
Well, today was a story of incredible amount of pullback, both on the Nifty and the Bank Nifty. The day started lower and it only went deep into the red as the Bank of Japan actually came out and did something which no one expected them to. They took up the level to which they are allowing the yields to trade in Japan. That sent shockwaves. Markets around the world came off. But in the last 2 hours or so, things got better. Global markets did a little better. US futures calmed down. And here there was a very strong recovery as well. It was a normal kind of a correction by close, some 40, 50 odd points in the Nifty, and the banks as well doing quite okay. Broader markets also saw a pullback. Both the mid-cap and small-cap index intradays will tell you that. What led the pullback, the one common name between yesterday and today was Reliance Industries, top contributor to the pullback. These are not day-on-day top gainers, but what contributed the most? TCS, which was a loser on the other side yesterday, contributed a number 2 place. ICICI Bank, Axis Bank and Adani Enterprises were some of the other top contributors. Under pressure, SBI Life was a meaningful loser. iShares and UPL were the other Nifty cuts. What was under pressure? We've been highlighting over and over again the fact that PSU banks are pulling back. The PSU Bank index from the middle of last week is down 7.5%. UCO, IOB, Central Bank, sugar names have had 2 days of rally. They all pulled back. Sakti, Dalmia, KCP. And there were names like Godrej Properties, Angel One, and a few others which came off. Some railway stocks, they came back into rotation on the gaining side. IRFC, RVNL, FACT was higher. There was PNB Housing, which did well. And there was something like a Gravita India, which did well as well. I mean, pretty volatile, to be fair, not just here in India, but what we're seeing out there in the US as well. The 20-day, I think, remains the level which the market needs to take out, as we've been saying, for more bullishness to come back. And that lies about 100 points away from where the market left off today. Back to you.
All right, let's look at the other big story. Bank of Japan shocked global financial markets by increasing the cap on 10-year yields from the current 25 basis points to 50 basis points. This announcement saw Asian equities fall and the yen strengthen. Lata Venkatesh has more about this sudden announcement from the Bank of Japan. Lata, what does this mean?
Basically, the Bank of Japan is going to allow the yield on the 10-year to rise from 0.25, where it was capping it, to 0.5%. Just for those who are not following Japan very closely, the Japanese central bank has had a policy of yield curve control, YCC as they called it. It was a way to keep yields low so that they could kickstart the economy. Now that is coming under a bit of a question because globally yields have gone up so much. That, as the BOJ says, is creating financial issues. And Japanese inflation has gone up to almost 2%, 1.99%. Previously, it was in 2014 that it had seen such levels. After that, it has been, even negative numbers in terms of Japanese inflation. So there was a need. But it was a totally unexpected move. The current BOJ governor is going to retire or end its term in April, and any change was expected only then. So the market is totally not positioned for this change by the third largest economy. Now, why is it important? It's a sign that the last major central bank has also pivoted and become hawkish. It is believed, the market's perception is now this means that Japan will exit its loose policy. It was the only, the cross-asset funding by using yen was a very large trade because it was the only cheap currency. You could take cheap yen loans and then cross-fund other assets. That source now is kind of drying up. Japanese investors, a lot of Japanese money has been invested in US treasuries. As it is, the Fed is going to buy less and less. There's already a tightening there. One more set of people may stop buying. When Japanese investors, who are among the biggest globally, find that there is a little more money to be made in their own assets, they may flee or at least move a little bit out of other assets as well around the world. That explains why you saw risk assets everywhere falling. And then the last and the most important impact, Japan is the third largest economy. A rise in rates over there can reduce Japanese pace of growth as well, such as it is, however, slow that pace has been. So this is definitely only slightly less important than, you remember Powell's pivot in end November 2021, it's almost as important an event as that, according to market participants.
Right. Thank you very much, Lata Venkatesh, for putting that announcement by Bank of Japan in perspective for our viewers. Big development there in the financial sector. The other big story, European Union members have agreed on a cap on natural gas prices to tame the energy crisis after a week of negotiation. EU ministers have agreed to trigger a cap if gas prices exceed 180 euros per megawatt hour for 3 days. This cap will come into force on the 15th of February. Manisha, take us through all the action as far as the European Union's gas price cap goes.
Well, yes, that discussion finally has yielded results, and we have seen the 27-member European energy ministers agree to a gas price cap of around 180 euros per megawatt hours. Well, the discussion has been around these levels in any case, but we do also understand that the cap price will come into effect from 15th of Feb 2023, and deal will be formally approved only once all the countries within the European Union have approved it in writing there. The price cap will now apply to private gas gas companies or trades which are outside the energy exchanges. And this has had a reaction from the ICE, which is the Intercontinental Exchange. This is where the TTF gas prices trade. And the ICE has said that if the price cap is indeed put, then the exchange will have to move the contract out of Europe, and Netherlands is what they actually are looking at this point in time. Take a look at the prices as well, and we have seen a major reaction come in for them. The US natural gas prices have declined by 15% in last 1 week, and the TTF, which is the European Union gas prices, are down by nearly 21% in last 1 week as well. When you look at the price range in this year, that has been quite broad as well. The US gas prices have made a high of almost $10 per MMBTU, a low of 3.5 in this year, and currently trading at around $5.8. The TTF gas prices have made a low of 70 euros, high of 350 euros, and currently they are trading at around 108 or so, exactly where you also have the price cap coming in.
Well, I think it was inevitable that there would be a price cap because Europe simply could not withstand what happened last time as they were filling the gas storage at the same time as they were actually using gas. I think it probably will work, but I think it's also an anticipation of next winter where there is more worry because at that point, there will be no Russian gas with which to fill the storage. And so this is trying to prepare the ground. It will be interesting for its impact on LNG prices and this kind of coming competition between Europe and Asia for LNG.
All right, let's get you all the action from Parliament now. In the electric vehicle space, the centre has suspended models of 2 EV makers from the FAME scheme after receiving complaints regarding misappropriation of subsidies. Now, this information was given by the Ministry of Heavy Industries to Parliament today, and the complaints that they have received are mainly related to the violation of phased manufacturing program guidelines under Phase 2 of the FAME India scheme. These companies won't get their pending claims until they show compliance with PMP guidelines. The Ministry of Heavy Industries had received complaints against 12 companies, including Hero Electric, Okinawa, Jitendra EV as well. And a CNBC-TV18 news break confirmed Dabur India promoters, the Berman family, have sold 1% stake worth over 1,000 crore rupees via block deal. Dabur India says that the promoters have sold the stake to fund its private ventures. Hinduja Global Solutions Board has approved a 1,020 crore rupee tender buyback. The buyback is at a price of 1,700 crore rupees a share versus the current market price of 1,405 crore rupees a share. Nestle India boss Suresh Narayanan says that he would not be able to do an inflation forecast for next year, but expects it to be an easier year. He told my colleague Shilpa Radipeta that prices of milk and wheat are still elevated, but hoped that the worst of inflation is over.
I think, I would not like to speculate. Honestly, that's not the way in which we run our business. But I think the fact of the matter is, I do hope that the worst is behind us in terms of inflation. And one is seeing that in some parts there is a bit of a softening. That is, at least at the moment, it's showing it. But some parts of it, like, for example, milks or wheat or a few other commodities, are in fact showing a very firm trend. So on balance, it is a little premature for me to prognosticate on whether it will be an easier year in terms of inflation as compared to 2022. But if some of the trends that are there today, if they continue, then hopefully it will be a better year as compared to the rather unprecedented levels of food inflation that we had in 2020.
You're not looking at investments or acquisitions of brands, of D2C brands that are already there to bring them on board, because that's a trend that we're in.
Look, we have a fairly strong repertoire of our own brands that can seek resonance and relevance with the target consumers, and at the moment that is how we would like to approach it.
Time for a short break, but coming up, the government may look at sweetening the pot for potential buyers of IDBI. Sources say it may prompt the tax department to consider the stock's fair market value at the final bid accepted price. Details when we are back. Global markets have been keeping an eye on China. The nation has been seeing a surge in COVID cases, with a lot of reports on social media about hospitals in Beijing and other places in China reportedly overwhelmed. I'm now joined by Jonathan Chong, the China bureau chief of the Wall Street Journal, joining us from Beijing. Jonathan, we have been reading these reports on Twitter, on social media about long lines at funeral homes, long lines at hospitals as well, hospitals being overwhelmed. How much of this is true as far as the surge in COVID cases in China goes?
Yeah, there's no question that there are definitely more infections across China than the country has ever seen. This is a very rapidly spreading variant of the virus. A colleague and I, we went to a crematorium on Friday last week, so about 5 days ago. And there we talked to people who worked at the crematorium. We talked to 3 or 4 different people there, and we talked to a woman whose mother had died that morning. And in at least 3 cases there, we had learned that these were COVID cases that had led to the death, or at least they had tested positive prior to passing away. So, China officially had not reported any deaths at that time, and up till today, they've only reported a total of 7. So, whether or not that number is real or not, there's no question that a lot of people are getting very sick right now across China, but this is also a milder variant, so not everyone is dying.
Right. Could you also give us a sense of the spread of COVID cases, which would be some of the worst affected regions in China right now?
Well, it really started in the north. I don't know whether that's because just the variant was spreading more easily here, or because it's colder up here. I mean, we are in the depths of winter right now, and it's very cold in Beijing. So that may be the reason for it. But we're now starting to see reports that it's heading south, and you have people in Shanghai now starting to lock down. Whereas in Beijing, actually, I described last week, you had a lot of cases, and now you're starting to see life return. You're starting to see restaurants reopen. You're starting to see cafes reopen because many people, if you're younger, if you're healthier, if you got this Omicron variant, you were knocked out for 3, 4, 5, 6, 7 days. But once you've gotten over it, you can head back out again. And so I think we're starting to see some of that. But at the same time, if you're 80 and above, if you haven't been vaccinated, then you are at danger of being pushed to a more serious state.
Right. Jonathan, are we also getting some data to explain what's happening on the ground? Could you give us a sense of the number of COVID cases per day that are coming up? How high is it if we compare it to probably the beginning of the pandemic? How many deaths have been reported in the last few days?
Yeah, so the deaths is the only thing that really people are watching now. And as I mentioned there's only 7 deaths that have been reported, 2 on Monday, and then another 5 on Tuesday. There's no question that that's probably too low. And it depends a little bit on the definition. We got a sense of that from the National Health Commission of China, which put out new guidance today that gave a sort of the criteria for defining a COVID death is quite narrow. It can't be that somebody died and they happen to have COVID. They have to have died of COVID. However, you establish that. As for the number of cases, they've stopped reporting asymptomatic cases, which is part of the practice in China for much of the past 3 years. And the number of cases keeps falling, but that isn't seen as a real accurate indicator because there was mass compulsory testing for a long time, and now there's no longer compulsory testing. So a lot of people are testing positive at home, but these numbers are not making it into the official statistics. So it's really hard to judge today in late 2022 with 2021 or 2020.
Right, and this was a fear when the COVID lockdown was lifted and the zero COVID strategy was actually lifted by Beijing authorities, by Chinese authorities. Are we looking at some measures now to probably address this surge in cases that has now taken place, Jonathan?
I don't know that we're going to see any change in policy. What they've done here is they've really thrown open the floodgates a little bit and said, we need to learn to live with this virus and we need to learn to do it very quickly. I think in some very specialized cases where you have localized surges in a school or in a hospital, I think they may reimpose some restrictions. We did see in Shanghai earlier this week, schools were sent back online again. And that's one way of ensuring that the spread, at least happens at a slower rate than it might otherwise.
Right. Jonathan, thank you very much for joining us. Jonathan there telling us that it's very difficult to get data on asymptomatic cases and the total number of COVID cases in China right now. But as far as the deaths go, 7 deaths have been reported over the last 7 to 8 days or so. Thanks very much, Jonathan, for joining us from Beijing with that important update. Let's move on and get you other news right now. And this coming from the SEBI board meeting. Yes, the market regulator is all set to meet today. We learned from sources that the board is likely to discuss regulations on share buyback norms along with governance for market infrastructure institutions. Yash Jain has this report.
It is indeed a crucial board meeting which the Board of Market Regulator SEBI will be undertaking today, and what makes it so important would be some of the potential amendments which may come by as far as the buyback regulations are concerned. Remember, SEBI very recently had floated a consultation paper proposing a series of important changes around the buyback regulations, and the most important indication which came out of that consultation paper was the intention to do away with open market buyback starting April 2025. This consultation paper essentially proposed various important changes with respect to both open market buyback as well as tender route buyback. I'll take you through some of the important ones. First, to start with open market buyback, the amendments here were around time period as well as fund utilization from these buybacks. To start with, the consultation paper proposed a maximum buyback limit of 10% starting April 2023 and 5% from April 2024. Do remember that the current buyback limit is 15% of paid up capital or free reserves of the company. Also, the maximum time period, which is from the start to the end of the buyback, has been proposed to be cut to about 66 days from April 2023 and 22 days from April 2024. The current time period for the completion of the buyback issue is 6 months.
Right, and the government may be planning tax waivers for the potential buyers of IDBI. Sources tell CNBC-TV18 that the Finance Ministry is looking to relax a clause that would require the buyer to pay additional tax if the share price rises after the final bid. Sapna Das joins us with the details. Sapna, what is the government planning?
Well, if this clarification comes through from the CBDT, it will be a source of relief and comfort for potential suitors for IDBI Bank. Basically, this request being made to the tax authorities emanates on 2 grounds. One, as a matter of principle, because in the past also for strategic disinvestments, similar such tax reliefs have been sought and they have been granted by the tax authorities. So as a matter of principle, this request has been reiterated. Second, of course, the presence of LIC and IDBI Bank. So far, such kind of discussion arrangements were between government to government. Here, LIC is not government. So basically, maybe clarity is also being sought because LIC is not a government entity, so to speak. So that's one. Second, what it means basically is the bid price that is accepted both by the government and LIC will be treated as the fair market value. So any upside that emanates post the transaction, any upside that emanates on the stock, and any kind of additional tax outgo, that will be avoided. I think that's what is being sought. Clearly, and there are other parallel examples also. For example, in terms of the open offer, the pricing of open offer, here again SEBI has already granted an exemption. It has agreed to the fact that the bid price that comes in and is accepted by the government for strategic disinvestments, that should be treated as a benchmark for the open offer. So I think similar kind of arrangement is being made over here, and we are given to understand that there is quite a bit of interest for IDBI Bank stake sale.
All right, Sapna Das there. She has been reporting on the IDBI Bank stake sale for a while now. With that, it's a wrap on this edition of Business 360. Thank you for watching. Goodbye.